So this has been recorded. I will upload it to YouTube once we're done. I did not do live YouTube for this one, but it's all good. Let's see here. Let's start with Bitcoin. Hopefully you guys have been taking my advice and you've been tightening up your stops on the Bitcoin. Bitcoin did break $2,252.23 today. Crazy, man. Right now, as we speak, Bitcoin is up $178.43 on the day, which is just massive, massive movement. You're gonna want to tighten up them stops. That's all I gotta say. I can't stress that enough. You do with it as you will. But just remember, easy up, easy down, all right? You don't want to get greedy. Tighten up them stops. Lock in your profit along the way. Do not believe or think for an instant that Bitcoin is far removed from market manipulative forces. Do not think that they won't smash the Bitcoin too. They will do it and not think twice about it. All right? It's bubbling up right now, and just understand that there are forces at work here that are also participating in this market. I've talked about that and I've exposed that some time ago, and that has not changed, okay? So all types of players are in this space right now for whatever purpose or reason, all right? It's not just the alternative media folk, all right? Just want to put that out there, put that on the table for y'all. Right here on the screen, I have pulled up the Bitcoin ETF, the ticker GBTC. And as you can see here, even though Bitcoin is hitting new highs, this one is struggling a little bit. The previous high of 265, it just touched it today. I don't think it's going to have too much of a hard time besting it, but just as of now, you can see how it's obeying the price ramp, okay? It's obeying the ramp. And we still have a few more legs up to go here before things start to level off. Let me show you what it looks like on the weekly chart to give you an idea of where we go. So we had the huge, the straight up, almost 90-degree angle ramp on the weekly chart after a long consolidated period, which we had back here. We consolidated along with the cloud, and then when we got to the ramp, we had the first phase one with this ramp here. That was phase one, and then we're having phase two. We're into the phase two now. One more leg up possible to put a new high in before the next consolidation, and then we'll see where we go from there. All right, so this is your Bitcoin analysis. You're going to want to track this with the appropriate stops. So you're right about that. He wrote in the chat part, Bitcoin is always one hack away from some serious facial flesh getting ripped off. You're right. Understand, anything that's a market, people, anything that's a market has some form of manipulation already built into it. It has to. All right. Manipulation is not a bad thing per se. Markets have to be governed. There has to be things put in place to try to prevent, Bernie Madoff type actions from taking place. All right, so regulatory issues and things like that, those are a necessity. You do need some kind of oversight or control mechanisms to be able to not have the market be taken away from you or run away from you per se. So I'm not anti-establishment when it comes to regulating and controlling the markets to some degree. I am against the nefarious manipulation, like not allowing a market to normally rally like it should or normally correct like it should. That, I think, is where we should have free market type activity. But as far as government oversight and putting their hands on a market, that should only be to maintain the integrity of markets. That's about it. All right, so I don't want y'all to get that mixed up there, but yeah, Bitcoin, I'm telling you, Bitcoin is not immune to a smash or a crash. It's not immune to it. All right, y'all just need to know that. You know, if enough people catch wind of something going on, the market will go down. It's happened before. Bitcoin has crashed before. So don't think that it can't crash ever again. All right, right now it's benefiting from a lot of different factors. What we're going to get into here momentarily, it's benefiting from a lot of externals right now, and things can change. All right, news changes. People's attitudes change. Their reasons for doing things change. Nothing necessarily stays the same. Also, don't forget too that I did inform everybody a while back that this Bitcoin is the perfect mechanism for governmental control, for them to roll out their own type of a digital currency. They have to. It's the only way to control the money the way they really want to. Right now, they're not able to control the money the way they really want to. Right now, the money globally is being controlled pretty much just on almost like an honor system and through fear and intimidation instead of them actually being able to just control it the way they want. But that's coming. Let's see. Someone just asked, have I heard of Zen Gold? It is a cryptocurrency token backed with gold, and it's being released on May the 26th. Nah, I haven't heard of Zen Gold. Nope, have not heard of that. But like I said, at the end of the day, the money is changing. Everything's going to be Bitcoin-esque anyway. So this is perfect that people are getting on board with it, becoming comfortable with it, and eventually that's going to be the new wave. It's already been that way for decades anyway. It's just not been mainstreamed as far as how the public interacts within the monetary system. It's been on the back end. The powers that be already have everything on a electronic control grid anyway. It's just zeros and ones. So that's been like that anyway, but that's on the back end. We only get to see some of the manifestation of it the way we engage within the marketplace, like with credit cards and, you know, ACH money transfers, things like that, where you're transferring money from one account to another. How do you think that's happening? You're not physically going into a bank and saying, give me X amount of dollars, and then you take that money and then you walk it over to another financial institution and say, oh, here, I want to deposit this. That's the old way of doing things. The new way now is you can do it at your computer. All right, so that's how it's being done. Everything's electronically transferred anyway. So instead of doing it in little pockets and bits and pieces, the end game is to bring this all together anyway. So it's happening. It's happening right before our eyes. So keep your eyes open for this right here. For those of you who are not in the Bitcoin space, this is a way to obtain some Bitcoin exposure through the GBTC. It's not heavily traded. It's considered thinly traded as compared to other stocks. So understand that. All right, it's more of a pink sheet over-the-counter type play. So, but nevertheless, it's here for you. All right, to take advantage of. So just keep that in the back of your mind. All right, the next thing I want to cover is the bond market. You who have been following me know what I've been saying about bonds and how they operate. It's right here is the long bond, all right, the futures. This is a weekly chart. It's been in a well-established downtrend, as you can see here. All right, you can see that. Here's the retracement leg here. It's still in retracement. All right, having a problem with this resistance area here around the 155 area, but it's been maintaining, it's been holding between the 152 and this 155 area. This is the trading range where we are. It's been established right now. And we really haven't traded outside of this range. So top side right now, it's been 155.16. Bottom side right now has been the 150.07. So as you can see, we got about a 5-point trading range in the bonds. As long as the bonds are maintaining this positive momentum off of the lows here, you can anticipate absolutely 0% chance of any more rate hikes in the near future. In order for the rate hike issue to be back on the table, the bond futures will have to start coming back down again. The only way that yields can rise is for bond prices to fall. All right, that's math that cannot be manipulated or changed. It's just the nature of this instrument. So yes, we've been long-term down, but we're starting to correct. And as that happens, yields have no choice but to fall. The higher the price, the lower the yields. So that's how that's playing out. Nothing they can do about it. All right. So anyone calling for a crash in the bond market is very late to the party. They should have been calling for the crash of the bond market back here when the market was rallying and we topped out back in July and August of last year. And you can see that here. All right, we're at 177. Now here we are today, and we're trading at 153. So the call in the bond crash is a day late and a dollar short. We're a year into this downtrend now, and it's starting to show signs that it may be ready to correct and actually turn bullish again. Has a lot of work to do, has to get back above this trend line resistance, and then from there has to take off, get back up here to the bottom of the Kumo cloud, and then back above it. So it has a lot of work to do between now and then, but within this process, as the momentum is shifting to the buy side, this is helping not only price to elevate, but for the yields to continue to fall. Can't raise rates in this environment. So all things being equal, based on the trajectory that we've been moving, chances are this market should be able to get back to at least the 165 area, which would put it outside of the Kumo cloud and back into a bullish environment. So bond prices aren't going anywhere but up as far as the foreseeable future, all things being equal, and we're retracing off these lows. So basically a huge retracement, like I said, would put us around about the 162 to 165 range. So we still have technically about 10 more points to move up here. Just looking at just a cursory glance of the chart. All right, now next questions that we're going to look at. I've been getting a lot of questions about the stock market. Okay, let's take a look at the weekly chart of the Dow. We can see we're coming upon major rampage. The Dow is going to continue to rally all year. It's going to rally from now until the end of the year. The selling man go away is not working. If you selling man go away, you're going to lose out on all these profits that this thing is going. We're on track now to get into the 22,000 by the end of the year. That's right, Dow 22,000 by the end of the year is in play once we get the 3-week close above Dow 21,000, which you see here, we topped out and been having a problem with it, but it's in the process now of breaking that and really running. All right, so Dow 22,000 is in play. Looking at the Nasdaq, which has been the strongest of the stock indexes, we can see here that the ramp here is much steeper. So this is on track to go to Nasdaq 100 is on track to go to 6,000 by the end of the year. Nasdaq 6,000 by the end of the year is in play. All right. All right. Someone just asked about ticker symbol LOW, L-O-W. without knowing anything about this company. It's starting a downtrend channel right here. It needs to relock back in this week. Needs to close above $84.42 to maintain its bullish complexion. We do have a long period of consolidation coming up here. So it could fall off, get down to the trend lines, bounce around here for a while before headed up to the ramp, because you do have a nice ramp coming up here. So that's possible. But right now, it's acting like it's in a it's starting a downtrend channel and is in jeopardy of closing below support at 83.63. A close above support of 83.63 would open up the door to test the trend line support of 81 and then ultimately of 77. So that's what this is doing right now. All right, so where did I leave off at? Oh, crude oil. Let's take a look at crude oil. See what we got here on the crude oil. Crude oil is still in this long-term range-bound consolidated period. All right, we're in a huge range. You're trading within this range from here. So here you are. Here's your supports. All right, down at the lower 45, and then your resistance is up here at 50. So you're trading in a wide $5 range. So it's just going up and down within this. You know, it comes up and then it corrects. Bases out, rallies. Tops out, corrects. Bases out, rallies. And each rally has been lower and lower. 1, 2, and now 3. All right, each low has been lower. 1, and then here's 2. Then this next one down should put you down into the 41 handle, deeper in the Kumo cloud. So this is the crude oil extended. I mean, totally just elongated, consolidated market with a bias to the bear side of things. Okay, so there used to be a way I could do this. Hold on. Okay, so it's like this. If I could draw it like this. All right, so fanning it out. Here we go. Your supports are going this way. All right, and you can see that we are going down like this. All right, hold on for me for 1 second. Okay, so basically, this is the path that you're on right now. All right, so the price pattern is hitting the top of this range. Each one has been getting lower and lower. All right, and you can see that here. This high is lower than this high. This high is lower than this high and lower than this high. And then this is what you're doing. So you're creating this down channel here. So the next high should be around here. All right. And this will put the new low down here. All right. So this is the trajectory that you're on right now. So we'll have to wait and see. All right. Let's move on here. All right, someone has asked a question, what would be a good stock or index for clean coal technologies? I have no idea. I am not a traditional analyst in the sense of the word, where I research sectors and I'm a wealth of knowledge on sectors and certain things in coal and nuclear fusion technology. No, that's not me. I am an algorithm, so I look at the mathematical equations and models and take that to the next level. I look at price action. I don't know anything about the companies we're talking about. I couldn't pass a test if you gave it to me. It's not what I do. It's not how I roll. I'm sure there's other people on the internet, on YouTube, that are experts in certain sectors and can tell you all the fundamentals that your heart desires in that regard. That's not me. I'm not that guy. I can tell you how to make money with a particular stock within that particular environment, but I can analyze the security as far as price action. But as far as anything fundamental, I couldn't answer that question. I'm sorry. I know nothing about that. All right, moving on here. Okay, so let's see. Put this back. All right. Let's see. Someone's asking me about ticker GEL. All right, Genesis Energy. Thanks for giving me the extra information as far as their market cap and all that. That means nothing to me. That's the fundamental guys. That's not me. I could care less about market cap. I could care less about dividend growth, earnings per share, any of that stuff. It's irrelevant. The only thing that is relevant when it comes to any company is its share price. That tells an entire story. And that's it. You can't argue against that because that's the real story, regardless of all those fundamentals. Say what you want, but right now, this is where we are. We have a situation that looks like this. Where is this stock headed? Class? You know what I mean? You guys know exactly where this stock is headed. Exactly. Let's pull up our little thing here. As you can see, lower highs, lower lows. You can see the channel is well established. All right. However, you've been experiencing a correction off the lows. What has been the pattern for this stock? Every correction or rally is sold. All right. I don't see that pattern changing, not right now. That pattern is going to hold and stay right where it is. Okay. And unless something happens, this is headed to a break below 29.50. All right. 29.50 is in play to the downside on this stock. Now, we have to deal with the fact that we got positive momentum right here. We got positive momentum. All right. We're trading above the momentum line here. However, it's standing in jeopardy of losing that. Here on this weekly chart, this needs to close above that in order to maintain its bullish integrity. All right, and right now we're looking at 31.75. This market needs to close above 31.75 this week to maintain the bullish environment. A close below that opens the door to a drop below 29.50. All right, so this is my initial target. If I were to short this stock today, this will be my target. All right, I'm just saying. I think the shorts are in control of this market and probably will be in the short term. Okay, now let's see. Someone's asking about hack. Well, when you think hack, think attack. All right, here's hack. All right, you can see that here. I forgot to release this data. Let me take that from the last chart off of here. All right, as you can see, enormous ramps ahead of us, and then there's another one here. So this is obeying the first one. Then the second one is a long, lengthy trend, and then we got this huge thing coming up here. So yeah, from a financial perspective, if you are long hack, you will be setting pretty. I'm thinking about getting long this one myself now. So financially, hey, hack is in play. What does that mean for us physically? Nothing good. Nothing good can come of a rising hack. But now the media has exposed the game. All they've been talking about is this ticker. All right, that's all they've been talking about. I warned you about something on the horizon before all this. Now, I'm almost certain that they watch my stuff. I wouldn't be surprised if some of them are subscribed to me. But yeah, this is just telling us that what just happened to us, this whole global hack thing, is just the beginning, and there are bigger things on the horizon. Yeah, this is a very threatening picture right here. It looks very bad. So I think we've only seen the beginning of the cyber threat, the cyber attacks. I think they're going to morph into other things, bigger things, worse things. I think the first round was just, a test to see, what it would look like, what the outcry would be, things like that. And notice too that for the most part, it wasn't a U.S. thing. It hit the whole world but the U.S. So that's not by accident. That should tell you that the powers that be is using this as their false flag. So we need to be aware of that and move accordingly. But yeah, this is a bullish stock, and it has good momentum. And I don't see that changing anytime soon. As long as it can maintain a close this week above 29.77, we're good to go. According to this here, this should be at least a $35 to $40 stock. I'm going to set my target to 35 and then reevaluate once we get there to see if we can make it to 40. But that's my price point on that one. All right, moving along here. Let's analyze gold here. All right, gold has maintained a bullish outlook even after this correction here. Now we're pretty much back, and it's doing exactly as I explained and said it would do. Does anyone remember my last few videos where I said you're looking at like 4 to 6 weeks, and that was back in here. Here we are. All right, this is 1, 2, 3, 4. This is week 4. We could either come out this week or we could consolidate for another 2 weeks before we explode out. So right now we're within that 4 to 6 weeks target of getting out the cloud and then ripping and running. All right. Long consolidation coming up here too. This could be where they smack the gold at out here. All right, so you're looking at a couple of months out. All right, this looks like maybe, I want to say maybe 3 months out. Then we have to start worrying about this market getting possibly smacked. All right, let's take a look at silver. All right, so you can see silver though is under the gun. Silver has been mad bearish, mad weak. It's going to need a close this week above 16.99. Needs to close above this trend line resistance. All right, and that's just going to only put it back in the Kumo cloud. Silver has a long way to go. All right, a long way to go. All things being equal, it really, really needs to get topside the Kumo cloud in order to really get things running here from a bullish perspective. All right, let's look at the market with the most potential, natural gas. She's running. She's up at the high. She's at that 330, on her way to 350. And the way it's been moving, $4 is definitely possible. This ramp right here is definitely going to help that. This ramp is your 350 ramp. This ramp is your $4 ramp. And then here, consolidation. And then you see the beginning stages of another ramp. So this could go to 6 before we see any major correction. So natural gas looks like it is definitely on fire. Now I know what everybody wants to see, and that is the miners. What's going on with these miners? This mining chart looks like the silver chart, doesn't it? How does gold mining chart look like the silver chart? Almost identical. All right, so for it's weaker. We're consolidating here where the silver is running. This really needs a run. We need a close this week above 32.98 on the GDXJ in order for this momentum to carry over at least for another week. Then it's going to have to get to $35, and that's a major resistance at this $35 handle. Major strong resistance at the bottom of the Kumo cloud. Then it's going to have to consolidate for several weeks. This right here is 3 months of consolidation coming up. And then you got a little ramp, but then this is a bearish Kumo cloud, but it has a nice ramp to it. If it can get topside, then this is a $42 target on the GDXJ. So that's $10 away from where we are now. All right, and I just wanted to do that, get that analysis out of the way. Now let's take a look at what we have going forward for this week. All right, trading room, you know you've already taken a look at your post-wave price triggers, and you've noticed a series of rally alerts on there. And so far, these rally alerts seem to be playing out. The first one of note is gold. Gold, as you see now, is up $8.50. You see that right here. This is the gold futures, okay? And we did have a rally alert this week in this market. And so far, it is on track for that. Notice where those price trajectories are pointing to on your sheet, and that's what we're going to be riding out with. The other thing of note, as far as rally alerts are concerned, that I wanted to point out, we have several in the mining space, both gold and silver. I wanted to point that out. And let's see here. Of course, we have rally alerts in the water space. I mean, they're just all over the place. Also, this is carrying over to the treasuries. We talked about that in the treasury space. So like TMF is the ticker symbol there. So that one is looking good here, looking strong. Let's see what else we got our alerts at. What else of note? For those of you in the pharmaceutical space, GlaxoSmithKline, Biotech has a rally alert there going, and that's the ticker symbol BIOC. So that one has a rally alert. And let's see here, for those of you in the cannabis space, hemp, ticker symbol HEMP, also has a rally alert. And our Illuminati index, Halliburton definitely is one of note in the rally alert space. Copper futures has a rally alert. Sugar, cotton futures, the yen, Japanese yen as far as forex. We also have, what else we got of note? The Australian dollar has a rally alert on it. What else we got? There's so many. Just pointing out some notable ones here. Let's see. The New Zealand dollar. Nordic American Tankers, ticker symbol NAT, has a rally alert. I said there are quite a bit of those rally alerts this week on the weekly charts. And crash alerts. Let's see here. We got a couple of miners too. Soybean futures also has a crash alert on it, so I got to watch that. The British pound also has a crash alert. It's funny that this one's already red on the screen. It's right here. Let's see what else we got. Aetna, the FTSE 100. GameStop, say it ain't so. GameStop has a crash alert, which is not cool because didn't Batman, 2 just come out? No, Injustice 2 just came out. And right around the corner in June, we got Tekken 7 coming out. So say it ain't so. Let's see. Lithium Americas, yeah, has a crash alert. Oh no, I didn't even see this one. Oh, that's not cool. Natural gas futures has a crash alert. I'm gonna have to watch that. I'm gonna have to watch that one intently. I'm probably gonna have to tighten up my stops because I got long UGAS on that one. Sherman-Williams, I saw one of the Sherman-Williams trucks earlier out and about. They got a crash alert. United Technologies, Canadian dollar. Let's see. ID Systems. Man, there's so many on here. Many. UNG has a crash alert on it too, which sucks. All right, I'm going to tighten up my stops on the natural gas space because we're seeing a lot of those. Even though we're rallying today, which is good, it'll give me a chance to tighten up my stops. I think that's pretty much it. Let me just go now in the other order so we can look at our favorites real quick. Let's see what we got on NAC and dry ships. Let's see. All right, on dry ships is looking still very weak. It's still being shorted. It's being held to the short side, and we did trigger short this morning, which it's just not stopping. It's not stopping, but that's okay. Sooner or later, it'll get its act together. All right, let's look at NAC. Knick, knack, paddywhack. Give the dog a bone. All right, NAC has a crash alert. Oh, man. Another crash alert in the NAC. Let's see. We hit 175. Okay, it did not trigger today. Didn't trigger, but hey, this is on the weekly chart, so we gotta be mindful of that. All right, let's see. We got some more questions. What do you think about the dollar? Oh, I didn't do the dollar, did I? Okay, let's do the dollar. Let's see. My bad. Thought I covered it. All right, let's see here. Where's the old DX? It's around here somewhere. I'm pulling it up now. All right. Dollar index. Let's see. We're in a... Yeah, the downtrend is locked in as far as the bearish momentum is concerned. It's locked in. Let me look, see if we had any stops broken today. All right. No, well, hold on. Looks like we did. Yep. Here's the dollar right here. I'll pull it up. All right. The dollar now is in free fall and has been for some time on the weekly chart. It's in jeopardy of falling out of bed below the Kumo cloud. If it does that, then it has no strong supports. That is in jeopardy of crashing. We'll say crash at that point. It's been following, falling, gets into a rally correct. And here's where the Fed was keeping it strong, manipulating it, keeping it where it needed to be all last year. And then as soon as we turn the corner into this year, they let loose the reins, and they stopped doing it. And the whole rationale behind it was Trump said, we need a weaker dollar for import-export purposes. He actually said that. So they've been letting the dollar get weaker. All right, this is not something that, oh, the Fed's losing control, the Fed's doing this and that. No, this is being allowed to happen on purpose. They're letting the market take its natural course. All right, so this is them loosening up the belt a little bit, letting some of the air out for import-export purposes. All right, this is them. All right, this was them back here. Now this is them letting the air out. And notice how it's happening gradually. It's not just a straight crash. It's just came down, then rallied, then corrected, then rallied again. Now it's coming back down. So this is them. All right, this is them doing that. All right. So that's what I think. I think that at some point, this right here is going to stop, and we still run the risk of getting to 106. I'm holding my target of 106. We got close when we hit 103.82, so that's almost 104-ish. But I'm still holding to my 106 target because I think at some point they're going to need to strengthen it up again. I don't think this right here is going to work. Not in the current economic environment. I don't think this can hold long term. They're going to be forced to run it up like this again. That's my opinion on the dollar. Okay, let's see. Question. How far out do your algorithms track? Can you get rally crash alerts on a security for months out? No, because that's not what it does. The system is not projection. It's not based on projections. It's based on what's actually literally happening in the market right now. All right, so no, it doesn't project out like that. It's not a predictive model. It looks at what's happening in the world in any given market as of right this minute, and then it gives you rally and crash alerts based on what it sees happening right now, based on what the big institutions are doing or not doing, based on what the high frequency traders are doing or not doing, based on what regulators are doing or not doing, based on the how deep the market depth is when you look at the price ladders, based on what's happening in the put to call ratios, what's happening in the call options, what's happening in the put options. So it's taking all that into effect. All right, takes a look at the dark pools and spoofing and all this other stuff, and then that's how the information is spit out and compiled and collected. All right, let's see here. Question says, I noticed that prior to the hack attack, Cisco hit $33. I thought this can also be used as leading indicator. That's a good point. It might. AMD also shot up prior to that, and then it corrected. Let's go to the board. Let's look. All right, Cisco. I used to trade Cisco systems back in the day too. Cisco used to be something else, man. Cisco systems, JDS Uniphase, all of those, man. Okay, let's see here. So as you can see, it ran up, and then afterwards it corrected itself after everything blew over. Now it's trying to bounce. This is your Cisco, which looks a lot like your AMD. It ran up, and then right after release, here we go. All right, so this is the AMD. All right, long AMD. Full disclosure, I'm long AMD. This market needs to close above 1171 this week to maintain a bullish perspective. I'm holding it because you see these enormous ladders, these ramps coming up, as several of them. coming up. So this is going to be a $17, $18 stock with no problem. Maybe even higher trajectory for AMD. That's what I'm looking at. So I'm holding. All right, next question. Are you a believer in deflation before inflation theory? Such as, do you think the stock market will correct before the Fed does anything about introducing new QE and thus causing price inflation? I know it's hard to say because you rely on algorithms for trading, but just wanted to hear your opinion. All right, so that's a good question, and I have thought about that one long and hard. And I believe that yes and yes. We found ourselves at a very weird situation, and we've been weird for a while. I don't believe we have either inflation or deflation. I think it's something totally different. Reason I say that is because we're experiencing all of them. We're experiencing deflation on some things, inflation on other things, stagflation on other things. I think we're hitting all the Asians at different aspects and sections and segments of our economy and society. Like in food and energy, we've been seeing inflation. And other things, we've been, as far as wages, we've been seeing deflation. Okay. Basically, we see the costs and prices for things steadily increasing, but our ability to pay decreasing. All right. So that's what I've been seeing, in my opinion. And as far as QE, there's so many different types of QE. We've been seeing synthetic QE for the longest time. Synthetic QE is if they can lower the price of a barrel of crude oil, which they've done, that itself is a shot in the arm and a global stimulus because it brings down the cost of energy. All right. So that's one thing they can do, and they have done, and will continue to do if need be. The next issue, or actually not issue, but the best, another method of synthetic QE is to run up the U.S. dollar. Running up the U.S. dollar strengthens the purchasing power of that dollar. So that's a shot in the arm for the average American citizen. Other things they do is they manipulate the bond market. All right, you can stimulate the economy by keeping interest rates near zero. All right, so you do that. Now, in order to do that, all right, your bond price has to go through the roof, which it did. It hit 177. We just went over that. Okay, so that's a QE. Another form of QE, as we know, is the traditional first method is when the Fed, the government, prints money. All right, so they have different avenues to explore. They don't just have to print money. All right, but we've been experiencing all of the above at some point, at various points. We've been seeing all of that. All right, next thing says, thanks for doing this. I am currently studying for my Series 3 just for bragging rights. Good luck on that Series 3, my man. I'm sure you're probably a lot smarter than me. That Series 3 whooped my behind. I failed it the first 2 times I took it, passed it on my 3rd try. So yes, but you're in good company. Many people have failed the Series 3. As a matter of fact, most people that pass the Series 7 fail the Series 3. Accountants and CPAs have failed the Series 3. We've had professors with degrees in economics fail the Series 3. The Series 3 has to be the hardest test out there. And people who held both are the first to admit the Series 3 is the hardest The only reason why people think the Series 7 is so hard is because the exam is pretty much all day long, and there's a wider body of information you can be tested on. The Series 3 is only like 110 questions or something like that, and only lasts like 3.5 hours, so it's like half the time as the Series 7. But it's still time too, and you actually have, when you break it down, you only have 1.5 minutes to answer those questions. And of course, you need a 70% or better to pass. So the Series 3 is no joke. Definitely bone up on the hedging part. The hedging part is what takes people under, because you have to get you have to pass certain sections. And if you fail the regulatory section, you fail, period, regardless if you pass all the other sections. Just remember that too. All right, your regulatory section is your stay out of jail section. You have to pass that, or you will fail the Series 3 altogether completely. But the hedging part is what gets people. The hedging and the basis part, for some odd reason, I just couldn't get that down. That basis was tearing me up. So yes, bone up on that. Make sure you understand basis and the hedging part, and you'll be good to go. But the basis hurts people. If you memorize, I think it's like 3 or 4 formulas. If you can memorize those, you should be okay. I don't know if you'll get the question I got about the insurance company needing to hedge $1 billion worth of policies or whatever, and had to go into the bond market. That was like a paragraph question. I never did good on paragraph questions where there's math involved, and you had to figure it out. You only had 1.5 minutes to figure the whole thing out. So, but you have more tools at your disposal than we did back then. Back in the day, you know, we didn't have no internet. You know what I'm saying? Like you got now. You can go on YouTube and find how-to videos and all the other stuff. So there's a plethora of stuff on the net for you now that we didn't have back in the day. So anyway, kudos to you. Take my hat off to you, man. You can do it. You can pass that test, man. Go ahead and knock that out. I'm just curious though, why are you taking that? Is it just because you something you want to do, or are you actually trying to get into the business at some point? Because that is it's a monster of an accomplishment. At any rate, any other questions? I think I've covered everything I wanted to cover this morning. So we basically done an end of day report that I didn't do on Friday, and we basically just went over the midday market snapshot. Oh, you want to trade sugar? Okay, all right. Well, I mean, you know, you don't need a Series 3 to open up a commodity futures trading account, right? You don't need a license to trade futures. You just open up a brokerage account and start trading. You don't need a license. You only need a securities license if you're going to work in the business in some capacity, front office, back office, whatever. You know, sales, whatever. But just in general, you don't need a securities license to do that. And it's funny that you said sugar. A lot of people like to play with sugar. Back in the day, believe it or not, there are people who day traded sugar and cocoa and did okay. Even though those are thinly traded markets, they did all right. So it's possible, man. You can make it happen. Ah, okay, gotcha. No worries, man. Do your thing. I think that's awesome. That's awesome. Welcome to the biz. That's all I gotta say, man. Welcome to the biz. You're in good company. Let's see. Anybody else? Yeah, the wolf of sugar. I like that. Hey, you can do it, dude. People specialize. Seriously. Their dudes, all they do is trade cotton, or all they do is trade lumber or live cattle or feeder cattle, whatever. So you can specialize if you want and do well. As long as you have the love and the passion for it, you can do this. You know, it's not for everybody. People who trade, you know, for a living or work in the business, you know, we're an odd bunch. You know what I mean? So it's not for everybody. Yeah, sugar's no joke. You know, it's not. All right, can I take a look at CLNS? Let's see. CLNS. All right. Oh, this is a nice looking one. All right, as you can see, it's been in a downtrend, but not really. What happened was you had a downtrend channel here. Then you've been in a consolidation from here to here. All right, so this is a weekly chart. Keep that in mind. And now you're starting to break out. All right, a close above 1328 this week would open the stage for continued rallies into next week. I think you're going to continue to rally here, and then you have a huge ramp coming up right here. So my projection for this stock should initially top out around $15 to $16 before consolidation again. So this is a nice one. I would stay long. If you're long, I would stay long and see if you can get up to that $15 to $16 mark in CLNS. All right, next one. Do you believe it's totally impossible to trade with a system that relies on technical indicators like stochastic divergences and such? Ooh, that's a loaded question. All right, as you know, I keeps it real. I would be lying to you if I said that it couldn't be done. Yes, you can. I can't lie to you. All right, I'm gonna tell you the truth. Yes, I believe it is possible to trade with a system that relies on technical indicators like stochastic divergences and such. Yes, it is possible. The only reason why I say yes, it's possible, because I actually know of someone who is actually doing that. So, but they don't just rely on indicators though. They have their favorite handful of a couple of indicators that they use, but they don't just rely on that. It all goes back to the algorithm at the end of the day. It's possible. Back in the day, I knew people that did it, and there's more than one way to skin the cat. All right, there's more than one way. There's not just one way to trade, and that's it. I'll be lying if I was to say that, and that's not true. So I got to tell you straight up, no, anything's possible. Is it likely though? No, no. I don't think it's likely. It's possible, but I just don't know anyone who's doing it purely on the way you describe. They have a systematic approach to the market. All right, nothing discretionary. That relies solely on indicators like stochastic divergences and things like. No, I don't know nobody doing that. I really don't. I don't know anyone who's doing that. No. All right, but it is possible. Okay, let's see the next one. Do you think the Trump presidency derailed the price of gold, or is the correction we've seen pretty typical with new gold bull markets? Well, I'm going to say that Trump has nothing to do with the price of gold. The price of gold is based on other forces. Let's see here. Okay, here we go. All right. It's really technically not in a real bull market yet. All right, it's not a new bull market. It's not a new not right here. Back here, it did look as if, you know, we were doing something. We were in the new bull market up here. All right, we were. There's no question about it. All right, we're bullish on all things. This is a weekly chart. Everything's above the Kuma cloud. We are bullish. But then we lost something here. Something happened back here. All right, we lost it. All right, September of last year. Then we had this huge correction. Now we had another huge correction off the huge correction. And now it's trying to get bullish again and get something up and running. That's where we've been. Hawk smash, yeah, right? So no, nothing's really typical, but this is just something we have to deal with. We've been really consolidated for the most part for several weeks, for basically 2.5 months, all right? So that's what this is. Hey, you can't discount the Fed, man. You cannot discount the Fed, not in anything. I'm serious. You know, the Fed has a trading account too. All right, and the Fed is the biggest player in these markets. Discount the Fed at your own peril. If you don't think the Fed is playing in these markets, you are sadly mistaken. Yes, the Fed, we used to always make fun. We used to talk about this back in the 90s. We used to talk about this. When we'd see these wild rides, we say, oh, the Fed just turned on their trading account. Here comes the PPT. And we could time it by our watches when the PPT would step in. I'm not kidding. We would be clear to be ready to get out of the way when the Fed was coming in. And we will watch it and see the Fed come in at 2:30 without fail. Here comes the Fed to save the day. Boom, like clockwork. I'm not kidding. We'll make sure we were back from lunch at our computers and ready to push the buy button at 2:30. You didn't need a trading system. You just needed a clock back then. 2:30, go long. Didn't matter what you were going long. What are we buying? Doesn't matter. Go long. It's 2:30. Hurry up. Okay. I'm not kidding. Or on Fed days. Okay, everyone, be out of the market. Be flat before the announcement. All right, here comes the announcement. Boom. All right, the Dow's down 600 points. Ready, set, go. Buy. Buy what? It doesn't matter. Buy right now. Okay, market's back. Now it's back up 100 points. The Dow just rallied 700 points. I'm not kidding. That's how crazy things used to be. We are nothing like that now. These are the most controlled markets I've ever seen in my life, which makes it easier to make money than back then. Back then, it took nerves of steel. It took, you had to be the Joker mentally. All right? You had to be. Because only a crazy person would be able to handle it. Now, it's so simple. You know the Fed is manipulating. You know you got machines involved. And you know what they're going to do. You just see what they're doing, watch what they do, and then just do what they do. There's nothing, there's nothing, special about that. You're just doing what they're doing. So-and-so stock is in play. Big money is in it. Okay, well, me too. It's just that simple. We do what they do. We follow them, and then we just do what they do. It's not hard, man. Just that I have the tools to be able to do it. Not everybody has the tools. And it's just that simple. All right. Any other questions? I must say I really, truly appreciate you guys attending today's midday webinar. While the markets are pretty much tame, not too much going on at the moment. It was a good time to chat and go over a few things of what I'm looking at for the week. So, no other questions? Well, let me encourage everybody, if you've not already done so, go ahead and get that study course. It's available on the website, pulsewavetrading.com. Learn what you need to know. I'm in the process of coming out with another study course. I will be announcing that when that is ready. And we're just always looking to innovate, always adding more information, more tools so that you guys can succeed. And also, if you have not already done so, go ahead and sign up for the Academy so that you can learn what the Fed doesn't want you to know. and learn how we make money in these markets. It's just that simple. It's not rocket science. It's just all right there for you to take advantage of. All right, so if there's no more questions, I'm going to say thank you all for attending, and peace out. And trading room, I will see you in a few minutes after I process this and upload it to YouTube. All right, everybody, y'all have a blessed rest of y'all's day. Peace.